It's great to see you.
Thanks for having me, Nicole.
So there's so much to talk about when we talk about digital wallets. This is not something my grandparents talk about. It's something my kids talk about. But you're saying that the concept is going to change the way we live, change banking revenue, I guess, to a certain extent. Explain your thoughts.
Yeah, so we believe that companies that are offering digital access to consumers have a strategic advantage versus traditional banks. And that being their cost of acquisition is much lower than the traditional banks, and that allows them to do things that banks haven't previously imagined they could do.
Okay, so what would be examples of this so we have a better understanding?
Yeah, great question. So, a couple months ago, Apple launched the Apple Card. The press wasn't too big on it. I was actually pretty excited by it because everybody who has an iPhone can apply for a credit card in less than 3 minutes. That's previously never been possible. Not only that, but they can also use that credit card if they're approved right then and there via a digital credit card.
So, that's interesting.
Yeah.
So the actual credit card, if I recall, was going to be made out of titanium or something, right? Is this the card that we're talking about with Goldman Sachs?
Yes.
Right? And it was going to be titanium, right?
I think it is titanium.
Okay, so you would apply for this credit card in 3 minutes or less, and then you could use it right away.
Yeah.
That's unusual, right? Does anybody else do that?
Right now, no, but PayPal back in November announced that they'll be doing it. They'll be launching a credit card with their Venmo app come sometime this fall. So
okay, so just so that I'm not all over the place, let me stick with the bank's idea first. Okay, so I have a Chase credit card. It's a debit card, credit card. Mm-hmm. That's pretty much what I use most of the time. But that whole concept is going to change. So that will affect branches like Chase? Yeah,
so if we think about the distribution channels of banks, right? They've traditionally been physical branches that you have to go to in store, and previously were applying for credit cards in those bank branches. Now, customers can apply for a credit card from their couch and be approved and buy something all within that couch sitting. And so what we're talking about here is not just that the ease of applying is much lower. What we're really talking about is offering these services to much more consumers across the U.S.
So my teenagers use Apple Pay pretty much almost all the time. They use it in the taxi. They use it going on the subway, which I heard there's a little glitch I read in the paper, right, with this new Omni thing. I still use a good old-fashioned Metro card, but you can use Apple Pay and just tap and go.
Yeah, consumers love Apple Pay, and all you have to do is jump over to Europe or down to Australia, and the usage of these NFC payments are off the charts relative to the U.S.
All right, just so I understand, how do you get money in Apple Pay? I mean, because I use my Chase card, but I put money in the bank.
Well, Apple Pay is just attached to your credit card, so it's just a function that's tied together there. So it's meant to simplify that whole process.
But I don't put my paycheck direct deposit to Apple Pay.
No, but so that's where this thesis that we're working on is going. So we believe that. But
you can do that with Square.
You can do that with Cash App.
You can do that with Square because I've heard already about it. So that's exciting.
Yeah, and that's my colleague Max Friedrich, who works on ARKF, has been working on this digital wallet thesis for some time.
Right.
And we believe, so there's a couple things that are part of this thesis. One is the digital access to consumers. Two is the cheap cost of capital. And three is unique data. So as you said, if your paycheck is going into a digital wallet, the company that has access to that data has a much better time underwriting you than a traditional bank.
And it's my understanding for Square at least, right, that let's say the lower 50% earners, okay, let's just say not the people who make the multi-millions, but maybe the lower half are using this more often. They use Square, they like to deposit their checks in there, and you said the Cash App is very popular. So why would they even need a bank?
They don't, and that's part of this thesis. So we, on this thesis, what we've been working on is looking at the amount of interest that consumers were charged in 2018. We believe that number stands at $124 billion for 2018 on balances of $863 billion. Over the next 10 years, we think that $124 billion will be cut in half to $63 billion.
So when we look at all these names, Apple, Lending Club, PayPal, Square, what are your thoughts when you're saying, in the next 10 years, this?
So what we're really looking for are companies that have that trifecta that I just mentioned. So it's the digital access to consumers, i.e. lower customer acquisition costs, cheap cost of capital, and then unique data. And that data is sort of the critical point in that it allows companies to underwrite more consumers more efficiently.
So, for example, to get back to Square, I mean, just to use it as an example, so people that would work at fairs, for example, right, small businesses, they said that once they had the Square apparatus, or whatever you call it, that little terminal, right, that their business was able to grow because of that.
Yeah, if you allow people to spend money that they don't necessarily have on them, this is where credit cards really made their name, is that they allowed people to spend money that they didn't otherwise have. So they supplanted, checks for credit cards.
What about, I mean, I don't know, you must have discussed this at ARK. Cash is king, right? So we all have emergency money in our wallets just in case. I mean, what if we have a little event, right? And we've had one, where we have a blackout or we can't get access to things. You got nothing if you're cashless.
Yeah, I mean, we truly believe that the tech companies that are offering these digital wallets are much better suited to be offering these tech products versus the traditional banks, right? The traditional banks are used to bank branches doing transactions in person, whereas the tech companies have started from square one, offering digital alternatives to cash.
Here's another thought, right? So JP Morgan Chase talks about more branches. Even Goldman Sachs in their last earnings report this week said that they want to work more with the consumer. What happens to all of these physical branches? I mean, I don't know how many bank branches there are versus Starbucks or McDonald's or whatever. But as we have concerns about the mall apocalypse, now we're going to have all these open spaces for branches?
Yeah, I mean, look, we feel that anything that goes on in a bank branch can happen on your phone within an app. As you well know, your phone is probably multiple times more powerful than the first computer that you ever had.
Yeah, but here's the other thing: is I have a savings account at my bank where I earn percentage.
Sure.
Can you do that with the digital wallets?
Yeah, Goldman Sachs Marcus app is launching a Marcus app, and they're offering much higher interest rates than a traditional bank, or have previously have been.
Right. So in the end, when we talk about cybersecurity, you're saying that these tech are maybe better suited because they started off as tech monsters? Is that what you're saying?
Yeah, I mean, risk is an evolving thing that needs to be that companies need to stay on top of.
So Visa just acquired Plaid. Was that a good thing?
We'll see. I mean, it's a very interesting acquisition, as Plaid has been an enabler for companies like PayPal, like Square, like Lending Club.
Right.
So this could allow them to have some pricing power over or on top of their traditional business.
The other thing I think about is the cross-currency trade, right? So I go to the bank. I just went to Colombia, for example. I got the Colombian pesos. I went back. I brought the pesos back. What about international monies? I mean, how do these digital wallets handle that and the exchange rates? Yeah,
that's a great question. I mean, right now these digital wallets are not providing cross-border currency swaps at this time, but it's something that it's not out of the realm of possibility that they could be offering these things. It's very, it's relatively simple versus...
Only because my direct deposit right now is in dollars, but if I work for a European company, or maybe I'll be paid in euros, or maybe I'll be paid in pesos, or whatever.
Sure, and that's where credit cards have done well, is that premium credit cards have allowed people to spend U.S. dollars.
I just have one last thought. So a credit card that I had once charged 25% interest, which felt crazy. And I called and I said, "You got to lower this." And they said, "No, they wouldn't lower it. I've had it since college. There's like $2 on it. I don't know what's going on with that." But what are some of the rates that they charge? I mean, there's always fees.
I'm glad you asked this question, because this was one of the parts that shocked us when we looked at this was the long-term, since 2008, long-term treasury rates versus credit card interest rates have increased by 800 basis points. So we feel that traditional banks cannot continue to raise interest rates because they're already at an all-time high.